My name is Ami Ben-David, and I was here before in the panel, just continuing now to talk about something called Long the Bankers. This is a post that I published a few weeks ago, and it's the basis of something that we're building right now, and I wanted to talk to you about. So my background is in security tokens. I co-founded Spice VC, which was one of the first fully tokenized funds, assets in general, with the first regulation security token that was deployed. We the first to trade, and so on. And I've done a lot of things in the security token space, investing in companies, starting companies, and so on. And what I want to talk about now is what is next for digital securities, for the security tokens market. So 2 years ago, we started this security token market ecosystem. It's really just begun. And we played with it, and we did a few experiments. Fast forward a year later, an ecosystem started creating, an ecosystem with something like 100 companies by now, dealing with security token, building security token ecosystem, and so on. And we started realizing that security tokens are a very big dream. It's a concept that talks about how ownership is going to be managed in the future, how ownership of things is going to be managed in the future, and how it can be managed on the internet. And this is a big business. It's much bigger, in my view, than crypto in general. It's talking about things like global equity, talking about debt, about real estate. These are hundreds of trillions of dollars market, where all the private assets in these markets are basically managed in an analog way. They're not digital. And digitizing them is a huge opportunity, and that's something that we've been working on. And it all starts, in my view, with institutional investors, because security tokens in the beginning came from ICOs and continued after the ICOs, and ICOs were definitely going after retail. So people thought initially that STOs would go retail too, but this is not the case. STO security tokens are just regular assets. It's a building, it's a company, it's regular, these are not crazy things that go up and down. These are just regular securities. There are hundreds of trillions of them, but they're not suitable for crowdfunding. This is where the big players are playing, and we can only create an industry that is worth hundreds of billions of dollars and then trillions of dollars if we can tap into the institutional market space. And who is at the heart of the institutional space? It's the bankers, it's the investment banks, it's the broker-dealers, it's all the people that have been doing this for a long time. So on crypto Twitter, I've been seeing this slogan, long Bitcoin, short bankers, trying to bypass these. And I'm long Bitcoin, for sure. But I'm also long the bankers, because I think if we want to make the security token ecosystem work, then we need the bankers on board. They have the knowledge, they know what they're doing, they understand fiduciary duties, they have the access to all the big assets and the asset managers. They obviously have the distribution to the big capital deployment, and they have the motive to get into this market. So I think they're going to be at the heart of this, and in order for that to happen, all the platforms that we're building in the security token space have to be what I would call institutional grade. And I think that the current V1 version of security token is not yet institutional grade. And I'll describe the problem that I'm seeing. The problem that I'm seeing is in today's security tokens, the security token is just something that trades, but it's not the actual value. The value that it refers to is outside, is in the real world. These will be documents, these will be signed PPMs and subscription agreements, and they're not held in the token itself. So when the token starts moving, it's very, very hard for people to know exactly what they're buying, what the token actually represents. And the information of what the value of the token is not immutable. The issuers can change it. It's never complete. It's not always up to date. Pick any security token in the market today and try to find out exactly what the rights are. It's very difficult. And that creates something which I call the Brooklyn Bridge problem. I call it Brooklyn Bridge problem because I use this example so many times that I actually went out to, there's a blockchain called Ravencoin that bids itself as a blockchain for security tokens where everybody can create any asset they want and sell it anonymously to anybody that they want. I don't think it's a real solution for security token, but just to prove a point, what I did is I went there and I created a token called Brooklyn Bridge. And I can now sell tokens of Brooklyn Bridge to every one of you, and the miners on Ravencoin are going to be very happy and they're going to approve the transaction. But you're not going to be the owners of the Brooklyn Bridge, because there's actually no connection between what's going around on the blockchain to the real world where I'm not the owner of the bridge. Nobody's the owner of the bridge. And that's a problem because, if you want to create a new market, if you don't have information that is verified, then you cannot build a market. Some people will cheat, some people will exaggerate, some people will oversell, and then trust will erode and you will lose investor confidence and you're done. So I want to tell you about a new project that I'm working on, a project that I talked about here 6 months ago as a concept. I describe it as the concept for the future. It didn't exist as a project yet, but now it's actually being built. So I want to talk to you a little about it. It's called Ownera, and it's a blockchain network designed from the ground up for eventually trillions of dollars worth of assets, and it's geared for institutional investors. It's targeted at bankers and at institutional investors. The first thing we did is we built it on something called Hyperledger Fabric, which is very institutional friendly. The nodes can deploy on IBM or Microsoft or Amazon or Google. It's not like Ethereum, it's something that is trusted. It is a public network. Those of you that know Hyperledger, it's usually private networks, but we made it into a public network. And all the bells and whistles of security token are built in. So you have privacy built in, you have regulation enforcement, you have instant settlement, we work well with fiat, and the whole thing is a network that people can build application on top of this, just replace Ethereum and put that instead, and you get all these requirements of security token, institutional grade, out of the box. And it's a network only, so we're not competing with 99% of the ecosystem. We're just offering them a network that is different from the one that they have today, which is not optimized. But going back to the Brooklyn Bridge problem, the way that we solve it is that tokens on Ownera are self-contained units. They carry the verified value of what the token is with them on-chain wherever they go. And I'll explain how we do this magic, but the idea is that it doesn't matter if you're the first buyer or the 100th buyer in the 10th exchange at Saturday night in a remote area and you're buying a token, you will know as much about the token and about the rights that you're getting as the first person that bought it from the issuer. Because the information about the value is inside the token itself. And the way that we do it is in 3 layers. The first layer is called KYA. KYA means know your asset. It's the equivalent of KYC. KYC is the identity of a person. KYA is the identity of an asset. So KYA is simply a folder of documents that defines everything you need to know about the asset and everything that you need to know about your rights as a token holder. So all these documents are there, they're all signed, they're all packaged, they're all put on the blockchain together with the token. So it is self-contained, okay? And it's immutable, nobody can change it. So that you know, if you want to know what the token is about, you click the button from the network, the KYA comes up, and you get all your information. You have the same information as the other guy. And that's the first layer. Second layer is verification. I'll ask you a question. Can a person do their own KYC? Can they say, I'm not a thief, I'm not a money launderer? They can't do that. They need somebody, they need a third party that is trusted to make sure that the KYC is correct. And the same thing happens for KYA. And we think that the best people to verify what issuers say in their KYA are what we call underwriting nodes. So, and they will be people like investment bankers, broker-dealers, companies that are doing security tokens, but financial institutions. And Ownera is a blockchain that is run by these underwriting nodes. And the way that it works is that if you're an issuer and you want to deploy a new asset, you have to find an underwriter. You have to find an underwriting node. It could be a bank and a broker-dealer, as I said, or any company that is part of Ownera as an underwriting node. Once you find them, they will look at your asset, they will look at your KYA, they will verify it, they will stake their reputation to your asset and to your KYA, and they will bring it onto the network. From that moment on, they are your underwriters. So all the transactions going forward, they're going to be writing into the blocks on your behalf, and they will get revenues for this. So underwriters have a very good financial incentive to verify the truth. They're like the miners in the old, in the previous layer of the blockchains. They're like miners because they're verifying the truth in the real world. They're verifying that I'm really the owner of the bridge that I'm trying to sell, if I am indeed the owner of that bridge. And therefore, once you have the underwriters in this way, you have a platform where every piece of information is verified and everybody has the same information at the same time. Now, the third layer of creating trust is those same underwriters, and I was talking about the banks before as a great example. Those same underwriters, they already looked at the asset, they already verified the KYA, they know that it's legit, they can then turn around and sell it to their investors, to the big pension funds and to the big hedge funds and to the big players and all of their high net worth individual family offices and so on. They can sell it because they stake their reputation to it. So you have a situation where you have trust because you have all the information is verified, and it's distributed. And this is very similar to the real world today. If you wanted to do to launch something on a public network like NASDAQ, you would have to go through these processes with an underwriter. But in digital securities work, until now you didn't. So we built a platform that enables that and is much more flexible and it's much more robust. And that's institutional grade. So just quickly to recap of the way that it works, you have on the one side, there are three types of entities on Ownera. You have the underwriting nodes, and those will be, as I said, investment banks, exchanges, security brokers, service providers, and so on. You have the assets themselves, equity, debt, anything you can tokenize. And then you have the owners, which will be institutional investors and companies, and also the general public in the end. And the underwriting nodes, they do the KYC verification, they do the KYA verification, and then they allow the trade between the owners and the assets. It's a very simple system, but it's much, much more robust than what's happening today in the security token space. Now, I was oversimplifying things quite dramatically, just for a presentation to make it clear. But obviously, if we want to do security tokens properly, there's a lot of code and a lot of serious tools that need to be built. So you can see here the 9 principles of Ownera. I'll go over them very quickly. We've already talked about the owners. Owners on Ownera must have KYC, so it's not an anonymous network. You have the assets. The assets must have KYA. It's not an anonymous network for assets as well. Then you have the underwriting nodes. And then we have something that we call proof of ownership rights. The whole consensus is to prove that indeed the token that you're getting with the KYA inside it, verified, is indeed the truth. And that consensus is something that we are building on top of the consensus in Hyperledger Fabric. It's tested. It's not something that we invented. We're using it. After doing all that, we can do something called atomic swaps, which means you can have transactions happening instantly, immediately, even with fiat. So you can have transactions that are happening on the spot or based on a condition. There's a game theory that, moving on to the next one, there's a game theory. The game theory is where we incentivize those underwriting nodes to do good work. And the way that we incentivize them is that for every transaction of the assets that they carry into the market, they get paid a transaction fee. So they stake their reputation with the assets that they like, but they also get transaction fees for the lifetime revenues of these assets. I'm going to talk about privacy a second. Privacy is overlooked in security tokens, but it's extremely important. So we're going to do privacy out of the box. You can think of privacy in our system just like privacy in Facebook. The issuer will be able to decide whether everybody can see it, or only a few people can see it, or only specific groups can see it, and so on. Privacy is extremely important, especially for institutional investors. And the last thing I'm going to talk about is the regulation app store. The way that we built it is, today in security tokens, regulation is done per token. So every token has to build their own regulations separately. This is extremely inefficient. So what we're going to do is we're going to do an app store of open source regulation units, apps. And somebody can build an application that is a Reg D application. Somebody else can build an application that's Reg S application. Somebody can build an application that's a UK private company regulation. And then if you're an issuer, you just have to tick the box, which regulations you want to follow. And when you finish ticking the boxes, your issuance, your asset is now compatible to all these regulations that you just subscribed to. And those regulations can be initially approved by lawyers, but my vision is that the SEC itself can potentially approve such a regulation application, and by doing that, they will enforce the regulation automatically on every user across the Ownera network. So this is the project, and this is why I believe that banks are going to play such a big role in the growth of security tokens. That's it. Thank you.